Hey everyone, this is Thomas Wood with Microquant. Once again, we're going to be taking a look at the value charts live trading room trades of the day for March 15th, 2013. Had another great day, another up day, doing pretty well. This concludes our 17th week with only having 4 down days and never having a down week overall. So we're doing extremely well. We had a few very good trades. We had a couple losers today, but we also had a lot of winners that more than made up for any of those losses. So the first trade I want to look at is a short in gold, and the reason we took a short in gold was because we came right up here on this 240-minute chart. You can see we had the resistance line drawn from those previous highs, so we were also moderately overvalued. We were right up next to the previous highs. We also had a bearish divergence on the 240, so we had the okay to go ahead and get short. We went short right around 97.50, risking just beyond the previous high at 99, and that gave us profits. If you're still in it right now, you're up a few $100s a contract. You had the ability to be up about $500 or $600 a contract. So very nice trade to the downside right there. You could potentially be holding it. I know a few traders are in the trading room that are holding it longer term for a longer term trade to potentially retest this support coming across at around 1585. The next market that we'll look at is natural gas. We had a great trade in natural gas. We were risking right around 10 ticks, and we had the ability to take out around 90 ticks. So a great reward to risk ratio, which is what we were looking for. Again, this was off of what we call a double bearish divergence. So here's the first bearish divergence where we had higher prices and a lower high indicator, and then the second one where we actually got short was right up here, and we were short from 3.912, and it came all the way down to a low of 3.83. So a great move. And a few traders in the trading room were actually trying to hold this trade longer term for a swing trade to the downside, potentially to retest that broken trend line on the weekly chart. Lastly, we'll take a look at RBOB. We had a couple of very nice trades in RBOB. The first was a short right up here off of a bearish divergence on this 15-minute chart where we had higher prices and a significantly lower high indicator. That ended up rolling over very nicely, and you were able to take out around $500 to $600 a contract there. And then again, we had another bearish divergence on the 15-minute chart here where we were getting short, and you had the ability to take out around $500 to $600 to the downside there as well. So a great trade on both of those. RBOB is the last one we're going to talk about today. We've been doing a very good job of trading RBOB for the past few weeks. If you're interested in learning a little bit more about how to trade these bullish and bearish divergences that we're always talking about in the live trading room, feel free to join us in the Divergence Workshop coming up here in April, and you can find out more information about that at valuecharts.com. So that's all I have for today. Hope everyone has a great weekend, and until next time, happy trading.